Well, thanks, Mark, once again for joining us on Blue Notes. And we're actually in Wagga, and it's the latest Track Ahead report, one of the In Focus series. Quite a big one, this one. It's more than the sort of industry-specific ones. It's a whole Australian agricultural sector. So what are the key takeaways for Australian agriculture at the moment?
Well, that's why it's so long. It's difficult to just come up with a couple of little things that are really tight to describe our situation in Australian ag right now. But in general, if you put drought aside, and not to be flippant about the extremity of drought and those that are in it, things are going incredibly well. We have most of our key soft commodities trading in a historic high range. We have good production occurring outside the drought zones of Australia, and in that environment, we're collectively as an industry producing a good amount of produce at a good price. And we've seen rising gross value of production in Australian farming, and last year was kind of a record culmination of season and price outside of Queensland drought. And now, of course, we've got New South Wales and Queensland battling those drought conditions.
And as you say, it's outside of drought, it's quite a positive story.
Yeah.
Nevertheless, there is a drought. So what are the implications of the drought? We don't know, obviously, when it's going to end.
No, we'll see. I mean, most of our farmers are incredibly adaptive and resilient, and everyone in industry is looking to just get to the other side of this because we know there's a better future. The underpinning notion of food demand playing out globally suits Australia's strengths. We produce some of the best, safest, cleanest value produce in the world, and that should stand us in good stead into these markets as the drought breaks well into the future.
It's a shame there's not a competitive advantage in cockatoos because we do really well there. You talk about the need to compete overseas. According to the report, scale has to be a lot bigger. What's the essence of that scale story?
Yeah, we touch on a bit of consolidation. I mean, the Australian sector is consolidating reasonably quickly. We're seeing less farmers of larger size produce more. And so scale becomes the proxy to profitability and productivity growth. That's interesting in that at an industry level, I'm certain that we will do very well. We'll grow income, we will sustain markets, we will be creative in what we produce, and we'll have a growing gross value of production. And we're heading for this $100 billion as tabled by NFF towards 2030. I think that's a stretch, but it's a good goal. But at the same time, our composition on trend of farming is going to look different. And there is something to consider about if we're on trend to 2050 of having 40,000 less farmers than we do today. That creates a different looking composition of rural communities and economies and industry. But at the same time, we're seeing demands for new services coming to agriculture as well. And I don't paint it necessarily as a picture of gloom. It paints a picture that's different than maybe what's been in the past, but we have to be adaptive to a new world, and different ranges of technology and skills are going to be needed in and around farming of the future, not just having physical labour to produce the things that we have before. So I do have confidence, without knowing exactly what it is, that newer industries and newer populations will find their way into farming that haven't been there before.
And again, the scale addresses one of the key issues with agriculture, which is the volatility, whether it's seasonal volatility or supply and demand volatility. Is that volatility going to become less of an issue as scale develops?
I think volatility is here to stay. I mean, we operate in a variable climate and geography across Australia, and we deal into international markets. We sell the vast majority of what we produce into those markets beyond what is a local population that will only grow so far. If we're producing for 40 or 50 million people out of a population of 25 or 6, we'll always be exposed to those fluctuations, to geopolitical risks, to trade environments, to our own weather, to other influences in global commodity markets. Will all play their role, and so we'll continue to see volatility. I think farmers and farming often looks quite good on the averages, but it's the volatility that's the difficult part for everybody to manage. And to talk about drought today, I think there's two levels of response that industry is looking for. One is, how do we just hold on and make sure that everyone's in there for the right opportunities going forward? But equally, how do we then build better resilience into our industry, which means that next time the drought comes, everybody's a bit better positioned and organised in the way that we would react to that. So It's not just a question of having deep pockets for the drought that comes. I think it's around diversity of commodity production and having the scale efficiencies in place to do well when it's good, and then manage your money very well from those times. So it then becomes this balance between on-farm efficiencies and productivity improvement is the critical thing to focus on to ensure sustainability, not just financially, but to be sustainable in around having the money to ensure you're managing natural resources well for the future and you're sustainably producing crop at a profit. So that's a focus on farm. And I think at another level we just need probably a better coordinated approach to how we're placed in markets, how we're close to consumers, are we producing to niche and value, or are we on an erosive sort of path on commoditisation? Hard work and beyond the scope of farming itself, but nonetheless a real challenge for us.
Well, thanks, mate. We've only just touched on on some of the subjects that are in here because it is a big report, but thanks very much for your time with Blue Notes.
Pleasure, thank you.